Welcome to the Big O Money Show. Andrew Galvin, your host this morning. Tony Shore, my co-host today. Tony, how's the week going?
You know what? My week is great now that I'm here talking with you, Andrew. I mean, I've been looking forward to this all week, doing the show, and I'm like, I get to do the show with Andrew. I mean, I love Bill, of course. We all love Bill. Everyone loves Bill. But Andrew, you bring a lot of wisdom and a youthful energy to the show. You've been doing this a while now, though. I mean, I'm kind of complimenting you using youthful because you've been doing this for a few years now.
We looked back on some of the videos that we had done when I had first started with Premiere, and Bill stops the video and he goes, "You look really young there, Andrew." Okay.
He stopped just to point that out.
Yeah, he like we went past it and then he stops it, rewinds the video, and he's like, "Wow, you were young, huh?" I was like, "Am I old now?" I mean, I guess
you're older, more experienced.
Yeah.
Well, I know people who you work with and have helped, and they always have great things to say about you, and I appreciate all the help you've given people, folks in the community here in the Omaha area and the outer outstretches as well, and I think here in the Midwest. And I know that you have a passion for what you do and love to hear from our listeners. So I'm encouraging our listeners out there to pick up the phone. If they have questions about what we talk about today, give Andrew a call. Say, call up Par Advisor at 402-557-6730 and ask for Andrew Galvin and say, "Andrew, you said this on the show. I listened to the show. I want that complimentary consultation, no charge. I know you set aside some time slots to meet with listeners if they want to talk about their finances, get a review. You can show them where they're at and how you could help them moving forward. And then the choice is theirs. There's no sales pitch. It's only help that you give." I love that.
Yeah. Our goal is to try and meet individuals where they're at, right? And so, whether it's somebody that's been retired for 10 years, 5 years away from retirement, they're 25 and just starting investing, we run the gambit for our clients. And I'm really proud to say that, we have people of all age ranges. Sometimes people come in and they're like, "Well, can you help somebody like me?" And it's like, well, of course, we already do, and not that everyone's the same, but kind of when you fall into a certain age bracket, it seems like we deal with those specific problems, right? How do we save for retirement? Hey, we're 5 years, 10 years away from retirement. What do we need to start thinking about? Those are all questions that we help our clients with. So yeah, if there's something that resonates with individuals today, obviously, pick up the phone, 402-557-6730. Give us a call, talk to Justine, get on my schedule, please. And Tony, but before we get too far into this, I'm going to address the elephant in the room because, I'm sure you're sitting here thinking, why do you have a little splint on your finger?
I have thought that many times. Yeah. And I think you had it last time we recorded as well. Okay. And it's still on there. So what's going on there?
It was a tragic golf accident, actually.
Okay. All right. Yeah. Not a lot of sympathy. Listeners and viewers, we're not gonna sympathize with Andrew. In fact, it's been on there weeks, folks. I think he's just he leaves it on now because he gets sympathy for it.
Yeah,
right?
Yeah. Not even sympathy. People are like, "What?"
Yeah, actually, it's more of an embarrassment. You have to wear a finger cast, and it's from a golfing incident. That's funny.
Yeah,
you could say, I was helping. I stopped to help an elderly person change a car tire. On the side of the road, and the jack got caught in the jack, or I was
caught off a dog.
I was running a marathon and slipped hiking. Hiking Mount Everest, slipped and fell, but you were on a golf course.
Yeah. I took, so in all seriousness though, I did take a golf ball to the finger.
Ouch.
And that was not something that I would recommend for individuals.
Ouch. Oh, I guess I didn't know that. You just said
Yeah.
golf course, and I thought, what was he doing? Got it stuck in the ball washer or something? I mean, what's going on over there?
Somebody ran over his.
But you, like, somebody drove a golf ball and you were standing where it hit and it hit your finger?
Yep. Yeah.
That's crazy.
Yeah. Yeah.
What are the odds? Better your finger than your head, though, probably, or your eye or your cheekbone or something.
Out of every place I could have gotten hit with a golf ball, I think finger was probably, a good safe bet.
Yeah.
So, yeah. But in all seriousness, Tony, we're getting a lot of questions right now at the office. Obviously, markets have been a little volatile the past week or so.
Yeah. They're really volatile today as of the recording of the show. Yeah.
Yeah, I mean, we're looking at, about 2% down on the S&P. We've given back some gains on the Dow, the NASDAQ, in what is that related to? I mean, we're talking about oil.
Yeah.
Yep. And a lot of people, that listen to our program are probably a little bit older. And so they remember, the oil shock, the energy crisis of the 70s, the, early to mid 70s, late 70s. And so we get people saying, well, is this the same as the 70s? And, I don't know because, I know history often rhymes or repeats itself. People say, I would say it more rhymes, right? I don't think history unfolds the exact same way, in a given circumstance, but I think there are certain threads that you can pick up from that, right? So if you look back at the 70s, was it related to the oil price, and the energy prices at that time? Yeah, I think there was a part of that played into, the market shocks, the overall economic picture of the country. But does that hold true for this point in history as well? I mean, I would say that the short-term volatility that we've been experiencing these last couple of weeks, absolutely. I think that's related to this crisis.
Of course.
But I think that happens with any geopolitical crisis when it occurs.
Like the initial announcement of all the tariffs, Liberation Day back in April of 2025, market dropped 19%, right?
Yeah.
But then it rebounded to record highs. I mean, geopolitical things happen, politics happen, administration changes happen, and the market might take a dip or have a correction, but it's always come back higher than before, at least over the past 100 years. So,
yeah. And I tell individuals, and maybe I shouldn't tell them this, Tony, but I say it's never failed to come back and reach new all-time highs.
Right.
And if we think that it's not going to do that, maybe we should consider buying shotgun shells and whiskey. Because if the
Wait a minute, what kind of advice are you giving today?
No,
I thought I was doing a show with Andrew Galvin today. Bill, it sounds like Bill Altman's back in the chair there for a minute. That sounds more like Altman advice to me, but I think he's rubbing off on you, Andrew.
A little bit. Yeah.
But you're only kind of joking. I mean, obviously, you encourage people to have emergency funds and money in other non-stock related items, but for growth, even though compliance always makes us say, past performance is not necessarily indicative of future results. However, you have 100-year period in the market to look at.
Yeah.
The market's been around for over the last 100 years, and over that period, it's always come back higher. I mean, it keeps setting record highs. It's never set record lows.
No.
If you look at it over the last 100 years, it started at the bottom and it's went way up. Now, in there, were there big dips? You bet. And are there going to be big dips again? You bet. We might be headed for one now, but conventional wisdom says we'll even end up this year, probably. But nobody has a crystal ball. Did you bring your crystal ball today? No.
No, I was talking with a client the other day and I said, sometimes we put Mr. Kaiser in our vault here in the office and he, he looks into the crystal ball when we've got
I love how you shut Bill Kaiser in the vault, and hopefully he has enough air. Maybe he brings an air tank with him in there, because you guys have renovated that beautiful building and offices you have there. Still has the original vault from the bank that used to be there.
Really cool.
And you keep client records in there and things. It's very cool. I love that. The vault is very cool. If you ever go to the offices, if our listeners or viewers haven't been there, schedule that complimentary, no charge consultation. Go in there and make them give you a tour. Show them the bulletproof glass in Bill Altman's office and the vault, and it's the huge kitchen you guys have in there. It's a beautiful office.
It's fun.
And it's a fun office. And the vault, it will shut, and it is probably airtight in there. So I would worry about Bill Kaiser. Don't leave him in there too long, just long enough to work the predictions in the dark there with his crystal ball.
Exactly.
Yeah. But making Kaiser do that's probably a good call.
No. Yep. That was our thought too.
Yeah.
So, a lot of wisdom there.
But when people do get emotional, and it's hard not to when you watch the 24-hour news cycle or look at your phone and see the news. This morning I got bombarded with, oil prices are back up. Strait of Hormuz is shut. Dow is dived 600 points. You see these headlines on days throughout this week.
Mm-hmm.
People are going to get emotional, but that's where you guys come in. If you work with a trusted financial professional, you don't have to worry. I mean, you're not getting calls from all your clients saying move to cash, are you?
No.
Yeah.
Because we've kind of conditioned. I shouldn't say conditioned, because our advice is we're not going to move into cash, number one, when the market's down, because then what's our buy signal? Do we know when to get back in the market? And then what are we doing? Now we're trying to time the market. Are we traders? I mean, I don't think that's our goal here with clients who are trying to invest for the longer term, right? And so, time in the market always beats timing the market. Warren Buffett thinks that. I mean, Mike Binger says that. I mean, you talk to individuals that, are smarter than you and I, Tony, and they would tell you, hey, that's a bad idea. If you want to have some cash on the sidelines, some dry powder, I think that's good. I think you should have, again, that emergency fund you talked about, some bonds or maybe some fixed annuities or, CDs, whatever that safety net is for you. Let's build it into your plan for you, right? But we're not just going to sell out of our market-based assets because, hey, the market's down 2%. I mean,
yeah, even if it was down 19, you probably wouldn't tell people to get out. You'd say, depends on your time horizon and where you're at. Let's look at it. And hopefully, if a client is in retirement and needs money to live on, it's not all at risk anyway, right?
No. And that's the point, is we're going to stay diversified through these things. So that way, hey, maybe one year the market does end up negative. 2022, did we have other ways for clients to take income from other pieces of their portfolio that weren't down by 22%? And the answer is yes, we did. We had other places, other buckets of money that we had invested for a time like 2022, for maybe a time like 2026. And like you said, Tony, the market could still be up by the end of the year. Normally these oil shocks, as the short-term implications of some of these things dissipate and we start looking back towards earnings, we start looking back towards economic data, and we say, hey, this is happening over here.
Yeah.
But what's actually going on with companies that we're invested in?
Right. That's the bottom line. That's what the market's long-term going to look at, is the performance of the companies. How are they doing? Mm-hmm. And right now, the American economy and companies in the stock market are doing pretty well. Even though the overall stock market's down, companies are doing well. You have to look at other indicators too, inflation, jobs. Sometimes these are concerns that affect the market, geopolitical. And sure, we've had some volatility there this year, but I think the message here is don't panic, right?
No, these things happen.
Yeah.
And we go back to the oil thing. What's it going to take before you stop driving? Like, what's the price of oil that it's going to take for you to not drive to work, Tony? I know prices have gone up, right?
Right.
But
right.
what's that number?
Yeah.
If you ask somebody that, I don't know if they'd be able to give you an answer, right? Because are they going to stop working?
$21.25.
Okay.
That's my number. That a gallon. That's how high it has to get before I'm not able to go to work.
Right. And that's a huge jump if you think about it. I mean, I paid $3.19 yesterday.
Yeah.
My car.
$3.29 is the cheapest I've seen it here.
Yeah.
And most places are $3.49 now here in the cities.
Yeah. Yeah. So, I mean, has it gone up? Yes. And I know that there are people that are, on fixed incomes, and I don't want to make light of that situation, right?
No.
Short-term impact in those oil prices is probably not going to derail a
society. Yeah. or a retirement, honestly. But it's not great. Inflation, it does hurt people on fixed incomes, and no matter how much money you have or how little you have, retirement, you're probably on a fixed income except for your investment earnings, your growth. And so you've got to look at that. But the answer is to have a plan. Work with a trusted financial services professional. Have a plan. And if you have a plan and stick to that plan, that's where you don't need to worry about market volatility.
Yeah. Yeah, exactly. And the other piece, you brought it up already. I'm just going to reiterate it, Tony, because it's so important. If you have questions on this stuff and you can't sleep at night, or you're like, gosh, I guess I don't know what my magic number is on the oil price or how it's going to impact me. Well, it sounds like what we need to do is sit down and create your financial plan for you.
Mm-hmm.
We need to draw up a Social Security report. We need to draw up a Compass report, which is our version, our internal version of our retirement income plan, which, most individuals, at least from what I've seen, come into our office and they don't have that. They may even have an advisor, but they've never seen a retirement income plan that puts together the pension, the Social Security, the retirement growth, or the income from, what they've saved their entire working life.
Sure.
And then how do we allocate those in such a way that we can continue to grow? And if we can average a certain growth rate over that time frame, all of a sudden, all these numbers that for most individuals, we just are throwing at them as financial advisors. It's on a piece of paper on a one-page sheet, and you say, wow, that makes a lot of sense. And I understand now what it is that we're trying to accomplish. And maybe they leave the office and they say, well, I kind of forget what Andrew said about this, but, I look at page 5 of this report, and it's right here. And I know if I just average, 6, 7, 8%, total with all sources of my retirement, I'm going to be okay.
Yeah. Yeah, and you calculate in everything. You look at Social Security as the foundation. How much will that be? When should they file? Maximizing that. Healthcare costs, how to minimize tax burden, and all these things we talk about on the show all the time, and that's critical. And I was joking, of course, about that amount. You said, people wouldn't have an answer, and I gave you a specific answer on the amount of gas. But I have no idea what it would have to get to. Maybe $6 a gallon, maybe 21. I don't know. And that's just it. Most people don't. And I was just kidding. I mean, I hope.
Sure.
I don't think we'll ever see that, hopefully, at least not in my lifetime. But we do have to be aware. You shouldn't stick your head in the sand, but yet, the news makes its money off negative news, not positive. Right. So that's what you're going to hear. And not that things are not to make light of what's happening. There are a lot of serious concerns right now, but your finances don't have to be directly impacted. They're going to be impacted, but if you have a plan, you can still sleep well at night, right? That's the bottom line.
Yeah. Yeah. It's all about hewing back to that plan when things get tough.
Yeah.
Because when things are good and the market's rising all boats, right? Rising tide lifts all boats. But then Warren Buffett says when the tide goes out, you find out who's swimming with their pants down. which,
Whoa, nice analogy.
but it's
Wow.
true, right. And so that's where you want to hew back to that plan and you say, hey, I know that markets the last 3 years, have been tremendous. I mean, it's been a
Yeah.
great run, Tony, hasn't it?
Yeah. It's been unbelievable. The last 3 years, record highs every year. I mean, it's pretty amazing. The market has been so resilient too,
Mhm.
to all the news.
And the reason I bring the 2% down on the S&P 500 is because for all of the geopolitical tensions that we've seen this year, for all of the negativity in the news, for this, that, and the other thing, the market's only down 2%. Now, could it
Right.
go lower? Yes, it could. But the other thing is pullbacks are healthy. In a normal market cycle, it's not
Especially
a straight line.
especially for those who are still in their working years contributing on a regular basis. That's dollar cost averaging their way into the market.
Yep.
So when the market has volatility, it's fine for them. In fact, it's good. If you're in your working years, you don't need to worry because you're putting money in while the market's low. And that's a good thing because, as we know from the last 100 years, it will probably reach record highs again someday. And you get to participate then on all that upswing
Yep.
and all that compounding interest. So that's how the market has worked. And that's why people are invested, why people have 401ks and IRAs.
Yep.
And so we like to see that. So is there anything else you wanted to touch on? We started with oil and the markets, and it's kind of carried on from there and how that impact, because that's kind of the elephant in the room is the oil crisis right now. And it is a big one. I mean, oil is, hitting some pretty high prices right now.
Yeah.
And we'll see how that plays out because you have to watch it because oil affects the price of everything eventually.
Oh, yeah.
Anything that's made out of plastic, that's a
Commodities.
petroleum-based product, right?
Yeah. Airline tickets,
Yeah. I've heard airlines. I read this morning that
price.
airline tickets pricing is going up because of jet fuel. Yeah.
Yeah. And so the other thing that I'd say, Tony, is just on all these pieces, I think it's so important to work with trusted professionals. And I'm not even saying necessarily us, but we'd obviously love to work with you, right? But we also then have CPA in house, Julie Moeller. She's knee deep in taxes, and she does a great job. And one of the really cool things is like if we have a client who's her tax client, as well as an investment or an insurance client, if she has a question, she doesn't have to call the client to get information. We just talk internally here, and then that helps speed up the filing of the taxes.
You have it all under one roof and professionals. You have the whole team, tax CPAs, tax professionals, attorneys.
Yep.
In fact, you're getting attorney. You can get attorney advice inside and outside.
Yeah.
Someone, right? I'm not going to name names,
wife,
Andrea, but your wife is an attorney, an estate planning attorney, in fact.
Yeah. She does a lot of estate plans. I mean, Bill has worked with Cynthia Epstein for a number of years to help with estate plans. And then we've got Bill Kaiser, Brenda Dinan on Medicare.
Sure.
I mean, what else do you need to be able to make an informed decision? And if it's all in one place, I mean, certainly, obviously, it's always good to shop and kind of see what's out there. But, you go to Walmart because you can get your prescription, you can get your groceries, you can get your clothes, you can get, or like Sam's or Costco or, name a retailer, right? You go because it's convenient. And that's the other thing is we want to make this convenient for our clients. We want to give them the best possible advice and to do it with not only ourselves, but other professionals in their specific industry. And so we've cultivated that. And Bill Altman's been a huge driver of all of that, Tony. But, that's the expertise and what you get from us if you decide to work with us. Right. So if this or something we've talked about kind of resonates with you, feel free to give us a call. 402-557-6730.
All right. Well, I'll tell you what, great show today, Andrew. A lot of great information, and I hope our listeners will give you a call. You love to hear from them, even if it's just for questions. That does it for today's episode of the Big O Money Show with our host, Andrew Galvin.